SOFI stock has indeed started to reward shareholders yet again after this earnings report, and especially everyone that has kept their dime in hands and continued to buy the dip. Now, we're going to talk about SOFI earnings. We are going to talk about the SOFI short squeeze that is currently underway here today. SOFI stock up about 29%. Now, if you guys are new to the channel, we cover SOFI extensively, or at least we used to a lot more, and I want to get back to that. So if you guys like the SOFI videos every now and again, especially when big events happen, well, hit that like button and subscribe to the channel. And for the OGs that have been around with all the SOFI videos, we're gonna go ahead and show you guys that I still own every single share of SOFI that was in the last video that I showed you guys. And I don't know if you guys heard that, but that was some loud thunder. Okay, we're about to get hit with some thunderstorms, so I don't know if this video is gonna come out later in the day. Hopefully not. If the internet goes out, well, that's just very unfortunate on my end. Now, let's talk about SOFI. Let's talk about what's going on in the short squeeze. Ladies and gentlemen, if you guys want, subscribe to the channel or like the video. Thank you for tuning in. Let's get to it. SOFI Technologies earnings report blew everyone's mind. That is an article that I am certainly going to click on. Now it says a beat across the board and raised guidance are not what most expect in the current market environment. And it goes on to say that in Q2, SOFI added 450,000 new members. This was the second highest quarter increase in the history of the company, which now has over 4 million members. Galileo accounts have reached 117 million. Adjusted net revenue came in at 356 million, up 50% year over year, and adjusted EBITDA came in at 20 million. So before earnings, taxes, interest, depreciation, and amortization, the company is positive $20 million. So that's a very, very good sign that I don't think a lot of people fully expected coming out of SOFI earnings. Now, it says the company raised full year revenue guidance to $1.51 billion, representing 50% year over year growth. Considering that SOFI still expects a negative impact from the federal student loan payment moratorium and the current inflation environment, this is a breath of fresh air. Now, I want to point you guys to this other article. Maybe I can't find it right now. I actually read it on my phone earlier. But there's a big catalyst coming for SOFI stock. Let's go ahead. And it's essentially the moratorium that is ending. Right, but it ends on August 31st, and essentially Biden has the choice to forgive some level of student loan debt or just let the moratorium expire and then people have to start paying their student loans back. And a lot of people don't refinance if they don't have to pay their payments. I think that's pretty self-explanatory, and SOFI actually seen a very large boost to their refinancing towards the end of 2020 before that moratorium was ever enacted. And that's because people didn't expect the moratorium to actually go into effect. People flooded to refinance their student loans, and the point in being here is if SOFI can generate their earnings now, basically without their student loan refinancing business, which is the largest, most mature, most profitable sector of their business, well, on a fundamental level, SOFI is getting much better once that happens. And we'll know by the end of August or potentially over the next couple of weeks what's going to happen with that, and that is going to be a very bullish thing for SOFI stock. I will guarantee that to you guys. Not too many things are guaranteed, but if the student loan moratorium does not remain in effect, if it goes away, well, that's going to be insanely bullish. And you guys want to make sure to hit that like button for the thunderstorm that is currently going on. Wow, I would be surprised if the mic does not pick that up. And also, if you guys are not signed up with Webull, Moomoo, and Public, down below in the description is your way to do that and get up to 100 free fractional shares with Webull. So definitely check that out. That is an incredible deal. Probably not going to get that all too often in your lifetime. Now, as far as the actual short squeeze with SoFi stock, we're going to start with the option activity. So for the day, we're seeing 33 orders totaling $1.7 million, positive order value of 65%. Now, you're seeing a lot of interesting calls, like some of these January 2024 1250 calls, but also some shorter dated calls as well, like this August 5th $8 call, which is now in the money, but still on the break-even principle would be about $9. So people are expecting, and by people I mean hedge funds, are really expecting this rally to last at least throughout the rest of this week. So I think that is exceptionally bullish, and depending on what Robinhood reports in earnings today in after hours, that could either help or hurt this short squeeze that we are currently seeing with SoFi. And this short squeeze is really happening because SoFi has been aggressively shorted throughout 2022, reasonably so. As interest rates go up, people don't expect SoFi to have good earnings, and they were upset today. They were surprised. SoFi had great earnings, and that is leading to some shorts covering on their short positions. Now, as far as the short interest in dollars, that is sitting at $865.22 million. Estimated short interest of free flow at 18.42%, free flow out on loan 23%, and shares out on loan 168.71 million. Now, as far as the days to cover, that is sitting at 4.37, so it's very hard to get out of short positions, and that's why you're seeing SoFi stock up almost 30% at the time of recording this video. Now, the cost to borrow max sitting at 4.53%, cost to borrow average at 2.73%, and cost to borrow minimum at a negative 0.2%. Now, I want to see what happens with these cost to borrow numbers, especially heading into tomorrow, because you are seeing the cost to borrow max up about 1.5% from yesterday, and the higher this goes, the better for a potential short squeeze. Now, in regards to all of this, let's look at the technicals, because SoFi just broke out above its 100-day moving average, literally gapped up from the 100-day moving average after earnings came out. So this is a change in trend, and it would not surprise me to continue to see the stock make very big moves. The volume is up quite dramatically. Today, you're seeing about 132 million shares that have traded hands. Look at the volume spike that is on our hands, not considering the FOMO, not considering everything else. With just a short squeeze, this is incredible. This has caused the RSI to now trade at 72.90, a little bit on the overbought side, but that does not mean SoFi has to come down in a big way, especially after their killer earnings, after a potential catalyst that is coming by the end of August, and they're free cash flow positive. So me personally, given what we're seeing on a technical basis, if the volume can hold up, and especially if we can see a rally with even lower volume coming tomorrow, I think SoFi could reach as high as $15 per share. I don't think that is too unreasonable, and I do think the options activity we're seeing for the day does support something similar. So keep that in mind. Not a recommendation. I will not tell you guys to buy, do whatever the hell you want with your money, but this is the data here, and hopefully it provides you guys some clarity on this situation. Now, let's talk about earnings today, and Robinhood is reporting earnings in after hours as well as Lucid. Robinhood will move SoFi stock. It will move the broad market. So if Robinhood earnings are good, well, that's going to be very good for SoFi stock, and that could also help continue on this rally. Now, as you guys know, the markets right now, they have been rallying because of fears of a recession. The yield curve is inverted 37 basis points. So it's no question if we're going to get a recession or if we are in a recession. You're going to get a recession. Every time the yield curve has inverted, even in August of 2019, when nobody really had a reason to have the yield curve inverting, well, you still went into a recession when the with the COVID crash. So you're definitely seeing the rush to growth because growth is slowing down. Now, the weird paradox to all of this is that investing so-called experts will tell you that don't buy growth stocks during a recession. Well, it's the exact opposite. Growth stocks actually outperform during a recession and towards the end of a recession because there's not cyclical growth in the economy. Your Coca-Colas, your other companies, right, are not growing the same during a recession as they would during a normal economy. Maybe Coca-Cola was not the best example there, but you guys get the idea. Your Whirlpools, your more stable companies, the ones that investor like analysts will tell you to buy during a recession, well, they don't grow the same way, right? So when a business like SoFi is growing 50% year over year or doing some incredible numbers, well, people feel more comfortable buying that because at least that has growth. So that's really what is going on with this rally. The biggest thing you want to watch is the Fed expectations. And as of right now, 19% of investors expect a 75 basis point rate hike and 81% of investors expect a 50 basis point rate hike. So if that continues to go higher and you continue to expect more investors thinking we're going to get a 75 basis point rate hike, well, that's going to change the markets a little bit, because the markets right now, on top of the fears of growth and buying growth stocks, the markets are also expecting the Fed to slow down raising rates. And the only way that is going to happen is if inflation comes down. So on top of all of that, you have the next inflation reading coming August 11th, and that's going to be the most important day. That's where the stock market could move up 2 or 3%, virtually guaranteed. Now, we don't have another Fed meeting until September 21st. So if you watch this channel, well, you know that we're gonna get two of everything: two CPIs, two PCEs, two unemployment reports, two of everything. So there's a lot of data between now and September 21st that the markets are gonna have to digest and come to their conclusions on the rate hike expectations. And depending on what CPI is, well, that is going to dictate the path for the Fed. Now, let's go ahead and pull up SoFi stock for all of the OGs here. And last time we covered SoFi, we had 600 shares, portfolio diversity of 19.61%, average cost of $13.48 per share, current market value almost $5,000. Up about $1,150 here today, about 29.88%. Shout out to SoFi Anthony Noto and the management team. Total return negative about $3,100. Not concerned about it. SoFi is, after all, a long-term investment, and days like today make you really happy about your decision to invest in SoFi for the long term, even if you wanted to add to your positions at this current level. SoFi is still down 38% from $13.48 per share. So it's still not a bad time to buy the stock on a fundamental basis, even for the long term. And if you guys can't tell, I'm very confident in SoFi over the next 5 to 20 years. That's why it's 20% of my portfolio. So that is going to be it for this video. You guys hit that like button and subscribe to the channel if you guys have not already. Thank you for tuning in, and I will see you in the next one.